Hello everyone, this is Professor Karen Kent. This is part 2 of chapter 15. Now we learned about common share. Now we're going to learn about a little bit about dividends. There is a different type of dividends. We are talking, there's a cash dividend, there's a dividend in kind, and there's a stock dividends. Stock dividends. So cash dividends are when they paid in cash. Dividend in kind, it could be a property dividend, or those type of things. It's called if you give instead of paying a dividend payable in corporation pays the dividend in asset other than cash. It's called a property dividend. Then we have dividend can be paid in merchandise, could be paid in real estate, or could be paid in investments, or whatever the board of director decides how they want to pay the dividend to their common shareholders and the preferred shareholders. Then the stock dividends are given in corporation may issue a stock instead of a cash dividend. So those are some of the dividends that we are going to be learning about. The more we are in this chapter, we're talking about cash dividend, how they are paid to preferred and common shares. That's what we are going to be learning about in this next example. When we talk about, I wanted to just go a little bit more into it. What do we mean by preferred share when they get it, and what different type of shares, what different type of dividends do they get. Now, if you turn to your page, sorry, I thought I had the page. When we're talking about preferred shares, there's a different type of dividends they get. If the page that I was looking for is page 15.6 has what type of dividends, the features, some features of preferred dividends, and we will be learning about cumulative, we'll be learning about convertible, we'll be learning about callable, we'll be learning about participating. Cumulative, what are cumulative? Dividend on cumulative shares that are not paid in any given year are known as dividend in arrears. So if they're not paid in a year, they are in arrears. So then what happens in that case is that next time the dividends are issued, you have to pay what was in the arrears before you pay the current year's dividend. Convertible preferred share can be converted into common shares. Callable is the issuing corporation can call or redeem its options. We'll be learning a little bit more about it in chapter 16. And then we have a participating preferred shares they share the profit distribution that are higher than the prescribed rate of the preferred share. So what they want to do is they want it as same rate as the common shares. So we're going to be learning about it, what it means of participating, fully participating, cumulative. So that's the next example that we will be dealing with when we are talking about preferred shares dividend. So this is the next example, and then what do we mean by each of the terminology in this. So now what happens in this example, assume that the given year 50,000 off is to be distributed as a cash dividend. So the company decided to issue a cash dividend. Outstanding common shares have a book value of 400,000 and $1,006 preferred shares are outstanding, issued for 100,000. So this is the value of preferred shares, and what they're doing is the value of common shares is 400,000. So this $6, what does this mean? Dollars, that means that the company is going to pay $6 per share to preferred dividends. So their preferred gets the first bid on the, anytime the dividends are issued, the preferred gets the first bid, any leftover goes to common shares. So in this case, what happens is you have we have two type of shares in this company. We have a preferred shares and we have a common shares, and then we have a total. So if you put it in this template, it makes it a little bit easier. So the company decided to issue 50,000 cash dividend. We want to know how much of that 50,000 goes to preferred and how much goes to common. So first we are going to give it to the preferred. So how many preferred shares are outstanding? 1,000 preferred shares are outstanding. 1,000 times 6, so they are going to get 6,000. So if you give them 6,000, you're left with 44,000. The company is left with 44,000, and that 44,000 will go to common. So 44,000 is goes to common and 6,000 goes to preferred share. They both are equal to 50,000. 50,000. So that's just very easy, but sometimes it's not easy. So let's go to our next one. Next one is the word is cumulative. Cumulatives and non-participating. So let's worry about cumulative first. When we're talking about cumulative, is they are in arrears. Means if they haven't paid it in the previous years, you have to owe them for the previous years and then the current year, and then the leftover goes to common. Now what happens in this case? They are saying the dividends were not paid on preferred shares in the preceding 2 years. So the past 2 years they haven't paid any dividends. So since they're cumulative, if they're cumulative, you owe them for the previous year before you pay the current year, and then the rest goes to your common shares. So let's go preferred shares, then we have a common, then we have total. So total we gave 50,000. The question does not change, so the question stays the same. So first we have to pay preferred the arrears. How many years? 2 years they haven't got the dividends. How much dividend they're getting every year? They're getting 1,000 shares times $6 per share. So you owe them 12,000. Preferred shares are going to get 12,000 for the arrears. Then we have to pay them for the current year. So we're going to pay them for the current year. Current years they're going to get 6,000. How did we get it? 1,000 shares outstanding. Each shares they're paying $6 per dividend. So then altogether we paid them 18,000. Now we're left with 32,000. So 32,000 will go to your common, and then we are left with nothing to distribute. So if the company issued a 50,000 dividend, from the 50,000, 18,000 will go to your preferred, and then 32,000 goes to your common. So this is how it is. So this is how it will be. Now, in this case, what the question was saying, cumulative and non-participating. So now what we wanted to do is let's change it. It's cumulative. What happens in the next example? What question is asking us to do? If preferred shares are non-cumulative, means they are not cumulative, but they are fully participating. So how is our question answer changes if this is we're asked to do this? It's non-cumulative, means they're not accumulating, however they're fully participating. So let's do it again. So we have preferred shares. We wanted to know how much of the 50,000 goes to preferred, how much of the 50,000 goes to your common shareholders, and then the total is we have to distribute 50,000. So now first we're going to give them the current year. First, if it's not cumulative, we worry about the current. So the current portion is only 6,000. So then we give them 6,000. We're left with then you're left with 44,000. So now when we gave them the 6,000, we want to know what percent we gave them. So, and then how we're going to figure that out? We're going to find out. Now, if you look at it, the question at the top, the question they told us, they told us, and the question was that they are, if you look at it, the value of your preferred shares was 100,000. The value of your common shares was 400,000. So let's put those things in, and that way you can easily see it and what we're trying to do here. So what we're trying to do is, when we gave them $6,000, we want to know what percent did they get, what percent they got, preferred got, so that we can pay common the same amount. So the dividend we paid to preferred shares was 6,000, and the value of your preferred shares was 100,000. So we gave them a 6%. So this is the dollar value of your preferred shares, and this is what the dividend they got. So we paid them 6%. Now the value of your common shareholders is 400,000. So what happened when it's a fully participating? Preferred got 6%, so then the common is also gonna get the 6% of the value of their common share. So in this case, the value will be 24,000. So now we gave them 24,000. So then if we gave them the 24,000, we're left with 20,000 to be distributed to preferred and a common. When they're fully participating, what do we have to do? We have to give 20,000 equally to according to the value of their preferred and common share. So what happens in this case? I'm just going to erase a little bit so that I can get a little bit more room, or maybe I could do it this side. Let's do it this side. So we know we have a preferred share. The value of preferred share is 100,000. We know we have a common share. The value of common shares is 400,000. The total value of both preferred and share is 500,000. So when we are giving, we need to distribute 20,000, and we wanted to know how much goes to preferred and how much goes to common. So if we do 100,000, that's the preferred, divided by the total value, multiply by what we need to distribute, gives you how much should go to your preferred share. Then we're going to do the same thing, the value of your common share divided by the total value, multiply by the 20,000 that we're trying to distribute, which will give me 16,000. So when we are giving them, when we are giving them the shares, the dividend, they are going to get 4,000, and they are going to get 6,000. So this is 10,000, and they are going to get 40,000. So we paid them 50,000, but the distribution of those dividends are different because what is given in the question. In this case, we are given in the question is that the shares are non-cumulative and fully participating. Now the next question is a little bit different. Now what changes in the next one? They're saying that now we made it, the question is that we made it that they are cumulative and fully participating. So everything is exactly the same thing, except the preferred shares are cumulative and they are not paid for the last 2 years. So you have to pay the arrears first, then the current year, and then you're going to distribute what we needed to distribute according to the fully participating. So let's do preferred shares, then we have a common shareholders, then we have a total. So then we are still trying to trying to pay the 50,000. So what happens in that case? We are going to give them the arrears first. Arrears are for 2 years. Each year they're going to get 1,000 times the 6, so that's your 12,000. We give them the 12,000. Then we have the current year. Current year is your 1,000 times the 6. We gave them the 6,000. So we already paid the 18,000. So we paid them already the 18,000. Now for the current year, what percent we give it to them? Again, we know we gave them 6%. How did we get the 6%? The dividend that we paid to them was 6,000. The value of preferred shares was 100,000, which gives you 6%. If we gave them the 6%, common wants the same thing. So if the common will get, the value of the common share is 400,000 times the 6, which is going to give you 24,000. So we got the 24,000. So altogether, 24,000, we give them this, and then we are left with 8,000, I believe. So now this 8,000 is fully participating. So what we're going to do, I'm going to do it this side so we know it. So we are going to do the same thing. You have preferred share, you have a common share. The value of both is 500,000. This is your 100,000. This was your 400,000. This is the dollar value of those shares. Then you're going to do 100,000 divided by the 500,000, and you're going to multiply by how much we need to give it to them, distribute equally according to the fully participating. Then you're going to do 400,000 divided by the 500,000 multiply by the 8,000. This I think will give you 1,600. This will give you 6,400. So now let's go and give them. They are going to get 1,600. They are going to get 6,400. So they got 30,400, and then preferred got 19,600. So it's just the same thing, but the question is asking you different things. So now if you wanted to learn more about cumulative participating, non-cumulative, I would prefer that you go to your chapter, first read the definition of it, and once you have read the definition, then you could come back and do this question. So if you needed to read up on it, so if I would recommend you going to page 15.6 of your chapter to learn more about your dividends, how it's paid and what you have to do with it. So if you were to do an entry, in this case, if you were to do what if you're asked to do an entry? So how much the company is issuing 50,000 dividends, preferred is getting 19,200, and common is getting 34,000. If they just paid the cash, then there's two way of doing it. So if they just paid the cash, we could do so if you have a preferred dividend, and then we have a common dividend, common share dividend. If this was the case, the preferred is going to get 19,600. They're getting 30,400. And then if they paid cash, you're going to credit the cash by 50,000. If they didn't pay cash, they just declared it, then it will be dividend payable. So this is the only thing is going to change. If they pay the cash dividend right away, you take it out of your cash account. If it's going to be paid, they just declare it, then it'll be a dividend payable. So there's a difference between declaration date and the payment date. So then I wanted to introduce something before I go further in this, is when anytime you issue dividend, there's 3 dates. At the date of declaration, when you declare a dividend, there's a journal entry. What is the journal entry? Normally you have a dividends and then dividend payable. So it's at the date. At the time you record it, at the date of record when you record them, there's no entry. Why there's no entry? At this time, we're just finding out how many shares are outstanding. So there's no entry at this point. So if the question is a multiple choice question is asked, do you do any entry at the time of record date? No, we do not do it. At the time of at the date of payment, is there entry? Yes, there is an entry. What is the entry? Then we declared it here we're going to make a payment, In this case, it's a dividend payable and a cash. Now, sometimes what happens is some companies, instead of doing it and debiting the dividend account here, what they do is they don't want to do the closing entry. They charge it to the retained earning account. So that is acceptable because dividend accounts gets closed out at the end of the year to the retained earning. So what the company does is instead of doing an entry at the end of the year, they just charge it to the retained earning account. So it doesn't matter if it's a preferred dividend or a common dividend, it goes closed out to the retained earning. So either one is acceptable. But you have to look at the question, what the question is asking you to do. Do they do closing entry at the end of the year, or they don't do closing entry? So the question will be asked, so you do according to what the question is asking you to do. So now this leads us to our next example. The next example is a stock dividend. So now we learned about a cash dividend. The next one we're going to be learning about is a stock dividend. So there's three type of dividends. Again, you could go into, I think it was if you go to your page 15, chapter 15, page 16, this is where all the dividends are. The reason I'm telling you what page is it, these are some of the assignment questions that you have to do you have to refer to the book to answer some of the questions in your when you're doing your assignment. So that assignment will be posted in your in next week. So let's do the stock dividends, what the question is asking, and let's see if we could figure out what we could do with this dividend. So we could change the now. When you're doing the stock dividends, instead of company paying the cash dividend, what they do is they give them the stocks. So what happens, what kind of journal entries you do, and what happens, and how do we declare the dividend? What happened to your shareholders when you have a different type of shares? In this company, if you look at it, before we read the question, we're going to look at it, what happens before the dividend. So this is just a screenshot. This is, I think the question is right from your book. If I'm not mistaken, the question is from 1518. So if you wanted to know where this question is coming from, the question is coming from page 18 of your book. So we want to know how your shareholders equity section look like after you pay the dividend. So in this case, what happens, assume that a corporation, it could be any corporation, has 1,000 common shares outstanding. How did they get the 1,000 outstanding? They have a different type of shares. So this is where they're getting 1,000. So they have a class A, class B, and class C shares. So this is, they have 1,000, and then they're saying that they're telling us, the question is the common share outstanding, the retained earning of 50,000. So they are saying the retained earning is 50,000. If the corporation declares a 10% stock dividend issue, so they altogether they have 1,000 shares outstanding, they are giving 10%, they're giving 100 more stocks. So when they're giving it to, they have to give it to everybody. They cannot just give it to one class. They have to give it to class A, they have to give it to class B, and then class C. So they have to give it to everyone. They cannot just give it to one class. So what happens in this case, and how do we do it? So they're saying then they're given a 10%, so they're going to give them 100 more shares to everybody, A, B, and C. If it is assumed that the share's fair value at the time of the stock dividend is $130 per share, prepare the journal entry to record the stock dividend. So, well, before we do a stock, before we show them how our shareholders equity will look like after we pay the dividends, we have to do a journal entry first. In this case, we know they have 1,000 shares, class A, B, and C, and then we gave them 10%. So altogether, we issue new 100 shares. Each share is $30. So this is where we are getting 130,000. So now, what type of dividend did we issue? We issued a stock dividend, which is going to be your 130,000. And then we're going to give them common shares. So there's more shares outstanding now, 130,000. So now, if you, they're saying, the question is asking here is, this is what it looks like before we issue the stock dividend. How we're going to give the stock dividends, that 10% stock to each one, and how the value is going to change. So what happens in this case is we're giving them 10%. So what happens if class A owns 400 shares, we're going to give them 10% more. So what happens is we're giving them 40 more shares. So class B, 500 times the 10%, we are going to give them 50 more shares. Class C has 100, we're going to give them 10. So altogether we gave 100 shares. So now this is just the how it's given to them. So now if you look at it, how would your shareholders, this is before the dividend, after the dividends are declared, how this is going to, what's the impact on this? So let's go ahead and show what the impact is going to be. Now we know that we issued a stock dividend. This is going to be increased by 130,000. So if that's going to increase, or of course, what happened to your retained earning? Something is going to, actually I did that wrong. I put an extra 0. So there is just one mistake I made here. That should be not, so it should only be 13,000. So let's do that. So this is, sorry, I have an extra 0. Of course, I would like an extra 0. Everybody would, if everybody will be happy if we give them an extra 0, but that's not going to go too far because we're only giving them 13,000. So now if you go 100,000 plus the 13,000, then that will be worth 113. So now, of course, stock dividend gets closed out to the retained earning. So then if it's closed out to the retained earning, it will be going down. So the value of that should be 37,000, and then will give me 150,000. So now if your total shareholders equity did not change, the value did not change, but your common shareholders changes and the retained earning changes. So what happens now if I were to, how would it look like in our the value when we are number? Now what happens in this case, nothing else changes. The only thing changes is your shareholders equity, the shares that we extra that we given it to them. So originally class A has 400 shares, now they will have 440 shares. They had 500, now they are going to have a 550 shares. They had 100, now they are going to have 110 shares altogether. Now they are going to have a 1100 shares outstanding. The value now, does it change anything to the value of our shares? No, nothing changes. It still be 150,000 because that's what it is worth. So this is how the question is telling you. So this, it will look like that. So let's put it together. Your after dividend, what will happen? You have a common share. Now we, instead of common share was 1,000 shares. So now after we declare the dividends, what happens to this? We have, instead of 1,000 shares, now we have a 1,100 shares outstanding. The value of your common shareholder will be 113,000. Originally was 100,000, now it's 13,000. Then we have our retained earnings. The retained earning value will be 37,000. And then you have, I'm just going to go forward. Then we have a total shareholders equity, which is going to be your 150,000. Of course, we have to show in the notes how much interest each shareholders will have. So then you're going to show shareholders interest. how do we show? Then exactly the same thing. So we have a class A, class B, class C. So you have 440 shares. They have a 40% interest, and then have 550 shares. They have 50% interest, and then we have 110 shares. Their interest is 10%. The value did not change, only number of shares changes. So this one was 75,000 and this one was 15,000. They both are equal to 150,000. So this is what's happening with it. Now, this is all about this chapter is issuing stock dividend, issuing a cash dividend, and issuing share subscription receivable. If you wanted to see where I got these examples, the examples are right from your book, and they are like I did it in a different order. If you go through the book, you should be um, able to go through it. And that's all for this chapter. Thank you for listening to me. I look forward to talking to you in chapter 6 with 16, which is our next chapter that we are going to be talking about. Thank you. Take care.